In fact, it looks like this is still very much on its way down towards deflation eventually, which I speculate will occur sometime in the middle of next year. So as I said at the start, okay, if we're going to have that bear market global recession and here's the key part, slip into asset price deflation for a short period of time, we would expect to see the CPI inflation metric continue to be disinflationary before ultimately slipping into a short period of asset price deflation. Which brings me on to the next component of this base case hypothesis, that anything you do to the M2 rate of change shows up in the inflation or the CPI with a lag. Okay, now because of the pandemic and the massive amounts of stimulus and QE we had, the M2 rate of change exploded, and whenever it explodes, okay, it has to come back to normalization. As it does so, I've been making the case over and over again, this is not very good, that we're going to be on our way down to a short period of asset price deflation over time. This has been a very contrarian idea for quite a long time, frankly. But when we take a look at a real-time update of this chart, okay, you can see that right here, okay, this is the rate of change of inflation. It's still very much disinflationary. It doesn't look anything like a bottoms in. It doesn't look anything like inflation is sticky or any of these ideas or narratives are correct. In fact, it looks like this is still very much on its way down towards deflation eventually, which I speculate will occur sometime in the middle of next year. If it's a little earlier or a little later, I don't really care.